it was a remarkable quarter and feels like things are getting back. I know the Didi news clouds it a bit, but how do you see it right now?
Well, things honestly are great. As the world is opening up, so is our business. We hit an all-time high in terms of gross bookings, $23 billion. October, again, was an all-time high for us. It was up over 40% on a year-on-year basis. Our mobility segment is hitting highs in terms of margin. Uber Eats, outside of the investments that we're making in some of the new verticals like grocery, hit EBITDA profit margins. The whole company is EBITDA profitable. So we're really pleased not only with where the company is now, we're finally EBITDA profitable, but also the road ahead. The supply situation is getting much, much better. So all signals right now are pointing to green.
Speak to the margin issue, though, because you did very well this quarter it feels like on a per drive kind of situation. Part of that seems to be a supply issue. Is when things come back into better balance, is that going to be better for you in the end or not?
It's going to be much better. Our part of the art and the science, very much of our business, is to balance supply and demand. And what we saw in the second quarter earlier this year is that the demand for transportation and mobility, as well as food, frankly, was growing much faster than supply. So the team went to work to make sure that we communicate to drivers and couriers out there. This is flexible work. The earnings opportunities are incredible, and the results speak for themselves. We brought over 640,000 drivers and couriers onto the platform since January. Drivers are up 65%. Couriers are up 80%. When you look at the amount they made this quarter, they made $8.6 billion, up 60% in terms of earnings as well. So now that you've got drivers and couriers earning really good money, the service is really singing. The average ETA, when you push that button and you get a car, is under the magic 5-minute mark. We want to take it under the magic 4-minute mark as well. But ETAs are strong, surge is strong, and the demand is only growing as the service quality levels are getting better. So far, so good. And we talked about Q4. And Q4, we expect profitability to increase. And right now, all signs are positive for us.